The global picture in 10 minutes. And not only the global Triodos picture, but also the bigger environment where we are operating in at the moment. And that is not an easy environment at the moment. Because if you hear every day there is a crisis, there is a crisis, there is a crisis. And I think it's important that we realize what is the nature of that crisis. And we have been as Triodos looking into the financial crisis, but we also see crises in other areas. There's a food crisis, there is an energy crisis. And I think it's important that we keep seeing the crisis as an opportunity to contribute something as Triodos through the borrowers who borrow money from Triodos and do all sort of very good projects. So I think it's important through all this crisis that we not get depressed, but see the opportunities and try to make it work where we have been founded for. Is it a temporary crisis? I don't think so. I think we should get used to it, but make it a little bit more light and see more the opportunity side of it than coming back on it all the time. So I think that's an important aspect. And if you look in society, then you see the way our people in government, regulators of banks try to handle the crisis is very much in a top-down approach. And what we see is that they hope with more regulation they can really capture the whole issue of banks not behaving properly. They try as governments to say, well, you have to spend more money. We are spending ourselves out of the crisis. That is at least happening in the Netherlands at the moment. We got our Prime Minister a week ago and he said, well, if you were planning to buy a new car, please do it now. And then somebody said, but we don't have a car industry. So, so you see the sort of approach of more consuming, it's not working. I think there is a much more fundamental question. How do we restructure our economy in a much more sustainable economy? So it's not about consuming more, but consuming in a different way. And in that different way, that's what Triodos is. We are financing the businesses who offer a different way of different products, different services, what makes the whole economy much more sustainable. What you also see as, I would say, a typical top-down approach is what in financial terms they call it quantitative easing. If there is anywhere a problem in the economy, in the financial world, just print more money and put the money in the system and see how we can consume more and so forth and so on. And what we all see that's not working, because if people get more money, then actually they're not spending more, they're starting to repay their loans. What is not such a bad thing actually, but it's not helping the economy in such. The real economy question is not about more money, it's about a changing pattern in what we consume and how can we make that transition work. And that's a much more complicated question, but a much more positive question as well than just spending more. What you see as well, and I come later back to it, also is affecting Triodos in a certain way, that because so much money has been put in the economy, interest rates really go down, people have money in their saving accounts, really experience that, not much is coming. And I can tell you, many people put deposits with Triodos Bank, and we actually have to put them at 0% at the European Central Bank. We have no other way to go at the moment. We hope we can grow the loan portfolio as fast as possible to spend all those savings in the right transitional economy, but it takes some time. It really takes some time, and that is also a reflection of where we are at the moment. A lot of money available, but maybe more initiative has to be taken. More initiative to make that transformation possible. What we have done in the Netherlands, but also starting to do in other countries, is to be part of that debate in making the financial system more sound, more looking forward and not repeating the mistakes they have done in the past. In the Netherlands, we have created a sustainable finance lab with scientists, with bankers, with politicians, trying to create an open debate about the questions around the financial system. Because it's not just making the banks do slightly different things, but also look at the whole system as a whole. And I think that's an important question that also real life examples like Triodos Bank participate in such big discussions. We can show how it can be done. We can really become a reference, although we also understand not all banks will become like Triodos. Would be nice. And many journalists ask, are you not afraid of that? They all become like you, and then is there still room for you? I always say that would be our greatest success. If people start to copy us, start to work like we are, we think we have achieved something. But that will take some time, I'm afraid. Then the banking sector, because we operate in a banking sector. Of course, there is the bigger economy, bigger society, but there is also the banking sector. And how is that working? I think the banks are looking for what they call new business models. How are we earning our money as a bank? And it's very clear that a more speculative way of earning money is not so easy anymore to justify to the public, to customers, to the taxpayers actually, because there are huge risks involved. So that is changing. And I believe that we are much closer now seen as a bank who is practicing a business model what works. So other banks looking at our numbers say, well, this is actually quite a healthy bank with quite a healthy equity base, with a proper return, not too high, not too small, a fair return, fair interest rates, and looking at the real economy. So interesting enough, in redesigning the business model, banks see Triodos more as a reference. Of course, they are not only about sustainability. We hope they will. At the moment, they are not yet. But the way of banking being close to the real economy becomes a much more attractive proposition also for banks. So we try to work with other banks on that. Of course, not in the open so much, because they feel a little bit embarrassed that they have to come to such a little tiny bank to see how things can be done. But in nice conversations, we try to share what we have achieved. What we did in last year, and we did another study before, that the Global Alliance for Banking on Values, what is a sort of global movement of banks like Triodos Bank, which we started in 2009, is now 25 members. So it's really grown a lot. We started with 9. We have 25 banks like Triodos Bank worldwide working together and trying to get across why this type of banking might be one of the solutions for the future for banking. Not the only one. We want to stay modest, but still we have our reference. We did a study last year, and we tried to compare ourselves as the 25 smallest, most sustainable banks with the 25 largest global banks, and see how that would compare financially. Not just on the good things we do, but really financially. And what we discovered, that actually our banks have twice as much of their balance sheet, of the resources, in the real economy. So in our banks, that is more than 70%. In many banks have huge balance sheets, huge money going around, but only 35% is in the real economy. And that is part of the problem. So that was an important finding for us, that maybe we have to have banks who are much more focusing on how much of the balance sheet is actually in the real economy, and for these banks was in the sustainable real economy. But what was also interesting, that the Global Alliance value banks were much healthier. They had a much higher solvency ratio, and solvency ratio means higher equity base, capital of the bank itself, to make it solid and strong in cases of economic recession or things can happen. We were twice as much equity, we had almost, as many other banks. And that is also important. We need stronger banks, and these banks have that. And last but not least, and that is also interesting for many investors, the average return of those banks were equal to the 25 largest banks. So there's always this claim of my large colleagues, you only can make money and be efficient if you are big. Actually, these numbers prove differently. And this is not just 1 year and not just a crisis time. This is a 10-year period. So it's quite a long period we did the checking. I think that's an important aspect of the broader picture, I would say, that we can show that this sort of banking has really future.